All right, so this could very well be Wave's last hope, this 618 level touch that we've had right here. If not, we could very well reset all of this price action to the upside. The only thing I'm not liking about this is that we have broken the 200 daily moving average as well as the 200 daily exponential moving average to the downside, as you can see here. I kind of drew this green box in my previous video to outline the zone between the 0.5 level on the fib retracement as well as these moving averages, but it looks like we ended up bringing it to the downside, which isn't a great sign in my opinion. Now, depending on what happens here and how quickly we can make a move back above these moving averages, the better off we will be. If we look in the past here, you can see that when we have had a fake out or somewhat of a fake out below them, it didn't last very long, right? This was probably the longest at like a week or so. So in my opinion, Waves really needs to do something like this, right? Or else we're going to see something like this, where we just break below it and start a new downtrend. This could be a bullish hammer forming on the daily. I did mention that this also could be one back here, but as I've mentioned before, these don't always play out the best, especially if we don't have nice volume spikes. Considering we had a larger green volume candle here, as well as a bullish hammer, as well as it testing the 200 EMAs, this would have been our better chance than this in my opinion, but it's still very possible since we have had such a move to the downside in such a short amount of time that this 618 level on the Fibonacci retracement will actually kickstart us back to the upside. But really, again, at that point, we're going to have to break all of this resistance. So for now, I'm going to get rid of this green box, but you can see that we're going to have to break above both of these moving averages. We're going to have to break above this downtrending level of resistance. We're going to have to break above this zone of resistance here with the red box, and ultimately the EMA ribbon and also the rest of the Fibonacci levels, as well as this high, if we want to see a continuation to the upside. So Waves definitely has its work cut out for it, but it's not impossible, especially if the rest of the market starts taking off again. Another thing to keep in mind is when we have very quick moves to the upside, we usually have very quick moves to the downside, and that also goes in the opposite direction, right? If we have a very quick move to the downside, we could very well see a very quick move to the upside again. So to sum things up, if we break much below the 618 or the 65 at this golden pocket, we could very well sweep the low again and undo all of this price action to the upside. If we do end up finding support here, we really need to break above this zone where the 200 EMAs lie. If we do manage to break above the EMAs, I'd really be looking at this zone between this downtrending level of resistance as well as this red box. So pretty much anywhere between $25 and $30 for another potential rejection. And if we end up starting a new uptrend here, pretty much our next stop is going to be back at this high here at around $70. So if you enjoyed this video, go ahead and hit the like button. If you haven't subscribed already, go ahead and do so as I try to post content daily. As always, this isn't financial advice, and I'll see you in the next one.